Hey, what up, everybody? Everybody, like there's actually people here. There's zero people here, but that's okay because I'm going to do episode 3 with or without you, and it'll just be recorded and you can see it later. Well, this week was an interesting week, and we got a lot of things behind us, specifically Jerome Powell, and a lot of unknowns, and leads us to a couple more knowns. So, what I'm going to attempt to do today is give you a weekly recap of what the market did and what I think it'll do. I'm going to basically do the SPY and the S&P 500 and the NASDAQ 100. So, without further ado, let's look at the charts. Share my screen, and then I gotta go to there, and boom. All right. So we are looking at. I'm going to go ahead and start with the SPY today, right? So first, let's address the elephant in the room. What side was I leaning? Well, I was wrong this week. I was leaning bearish. I was right last week, wrong this week. I went bearish again 2 weeks in a row. And boy, was I wrong. Instead of going down with a worst case scenario of closing this, well, no, closing the gap wasn't going to happen, but I had a worst case scenario of 503, which is around right there, right here, and because this is the bottom of the wick of the previous lower low, right, or higher low, excuse me. I was wrong. What the market ended up doing is it actually gapped up a nice amount on the following day. Retraced a little bit. Actually didn't. It just, that was a little gap. That's not a big gap. On the following day, no, that is a big gap because it closed all the way down here and then gapped up there. But let me make this bigger for you guys. Sorry. All right, there we go. This is better for everybody. So this was Friday, right? So I predicted for Monday, and what it did is instead of going down, we went up, and then the next day we had a very big, just like over here. This is a bad combo pair because this is called an engulfing candle because it completely engulfed the previous day's body. But then we had the same thing, but the opposite, and this is actually very bullish, right? So what happened here is bearish, and then the effect of this, although it was bearish, so it wasn't technically wrong, it wasn't a very big bearish daily move. But with this bullish candle reversal pattern, it was very bullish. We had a very amazing next day, huge move. And then even on Thursday, a gap up that ended up retracing just a little bit. And then on Friday, we gave back just a little bit more, but still did not completely fill this the daily gap. But all in all, the week was awesome for the market, for the S&P 500. It went up 2.3% from, actually, that's not accurate. Went up 2.16%. That's not accurate. There we go. 2.23% from its close. Hey, how you doing, Tim? So it was a good week for the market, right? So now, where do we sit on the technical readings? Well, we got a couple things. All right. We see here up here that we have an RSI. It's it's having fun with the upper quote unquote overbought band, which you shouldn't really pay too much attention to that in the mid small or to midterm, definitely not long term. But on the daily, we're on top of the average. This yellow line is the average. So this tells me that we are actually bullish, just like it did. It started being on top. Remember, if it's below, it's bearish. It's above, it's bullish. So we have one slightly bullish indicator telling us the market is good, is happy. Then what I've added this week for you guys to see People on my Patreon see this every day, but for these markedly recaps, I don't put it up. But I'm putting it up today because I wanted to get to an important happenstance. This right here, all these blue lines, they may look like a Bollinger Band, but they are actually called Keltner channels. And I prefer to use Keltner channels because the algorithm that they run on is average true range, or you may have heard that as ATR, average true range. So what we can see, right, is that there's a couple things happening, right? So let me zoom out just a little bit. Okay, so as you can see, because I say it every week, we are definitely in a rising wedge, right? And a rising wedge will always break down to the downside eventually. Let me rephrase that. Not always. Nothing's 100%. Most of the time to the downside, right? Oh, I'm going to go ahead and delete this because I was wrong, and I've already said I was wrong, so I can now delete this. Boom, 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 delete it. All right. So, if you follow the rising wedge, right? And even if it goes below this yellow line, just because it's below it isn't the end of the world. It could mean that I just have to redo my lines because you need at least two, and I prefer three lines connecting for it to be a line of either support or resistance. And I could have actually got closer so I can have the 3, 1, 2, 3 there. But this line is pretty accurate, right? But what I'm trying to convey is that it can go underneath. The price action can go underneath here and still not say, oh no, the crash is coming or correction is coming. No. But what does have a little bit more weight, at least in my opinion, is these Keltner channels. These Keltner channels, basically it's in two halves, bullish and bearish. Okay, when the Keltner channels are bouncing off the middle, the median, which by the way I'm gonna show you, it mirrors very close to the 21 EMA. Look how the Keltner channel center line mirrors the 21 EMA, exponential moving average. So I thought that was interesting, but that just happens to be the middle of both average true ranges. So, long story short, what I'm trying to convey again is that when price action is above the 21 EMA or the middle of these Keltner channels, that is bullish. And you should not bet against the market. You should not really bet against the market ever unless you're a professional. Shorting is very, very hard. And I learned the hard way. I try to do it less today because it's just it's very difficult. So I try not to short. I will short often, and I short through options. I don't short through shares. So there's different strategies for that. But I digress. We're on the top, right? So we are still technically bullish. And for me to be bearish, right, going forward, I'm only going to be bearish when I think we're going to go below the 21 EMA or the center line. So going forward, as of today, we're only in episode 3. Going forward, as of today, if I ever get bearish, that's because I think we're going to break below it, or maybe we've broken already. But I'm going to refrain from being bearish until that happenstance happens, right? So that's what happened in the week. It was a great week. Now, we are on the upper part of where price action likes to be, right? So if we go ahead and we draw a trend line, right? Actually, I'll use another tool that I've used. Let me show you this tool. I don't use it often. I got to find it. No, that's not it. Nope, that's not it. I should have been more prepared. Okay, I can't find it, and I don't want to take too long on this video. But basically, we are, in a within this upper blue band and this 21 EMA, the white band, we could say that we are technically like in a box, right? Like right, that's about right. And then we'll go ahead and do this one. That's about right. Now I'm not trying to I'm trying to create a, a good. So as you can see, we're at the top of this. So we're on the bullish part of the bullish part, right? So do I think we're going to take a little bit of a breather, maybe get a cooling down of this RSI? Yes. I don't think there's any catalyst coming up that is going to just make us getting very high readings. Price action is a bitch, but I do think that it's going to cool off a little bit. We're going to get a little bit of a cooler reading, and then that'll allow it to move. But the market definitely still does have some room to run. Now, once we start getting up at the 540 level up here, let's see how many. Okay, so we have about another 3.5 to 4%. When the market goes up another 3.5 4%, I'm really gonna say, wow, this thing is crazy, and then that'll really put to the test if this rising wedge is gonna be broken or not. So all in all, I can't be bearish. I'm not going to be bearish. I am going to say we're bullish, but I am not going to like wait for overextended and just say to the moon and then just be held liable for the correction that will come eventually. Corrections come, you cannot get away from them, right? So now, oh, I got to give my prediction. So my prediction is for the next week, because that's what I do. I'm going to go ahead and be slightly bullish, but I do think. Let me see. Let me go to Friday. Um, I'm going to be bullish, but just slightly. I'm going to say we're going to go to around 325. The market is currently at 321-ish. Yeah, so another $4 on the SPY. All right, let's go to the Qs. All right, so I have this here because this is one of my favorite things to look at on short-term trading. This is the bullish and bearish divergences, and you see this as indicator. Indicator references what I use, which is RSI, and then price is obviously price action. Right, so if we go to the Qs, right, please excuse all of my scribble scrabble because I do a lot with the Qs. We can see that the Qs are also in a rising wedge, right? And we can see that this yellow line, I'm going to go ahead and I don't want to create confusion. That's something I use for my day trading. That's the 10 close, but you guys don't want to hear about that. So in the Qs, we are also in the upper part of the Keltner channels, right? Which were the bullish of the bullish, right? But we can see that the Keltner channels are losing trajectory, if you will, as it pertains to the rising wedge, meaning that the Keltner channels seem to be losing steam, which although I'm still bullish on the short term, I do think that the curve is starting to do this, and then we're going to get that correction. But again, I don't want to be bearish, so I'll make this one quicker. I was obviously wrong on the Qs. We had an amazing week in the Qs. I think I was a little bit bearish. I'm going to be bullish, but I'm not going to get ahead of myself. I think by Friday, maybe we might pass that previous high. I think by Friday, I think I'm going to go ahead and say 550. Yeah, 550 on the Qs is my wait, is this daily? Yeah. Wednesday, there it is. It's Thursday. Oh wait, is the market closed on Friday? Yeah, the market must be closed on Friday because Thursday is the last day. Okay, yeah, so the last day of the week is Thursday. and I think 550. I think 550 is maybe slightly at or above the previous high we had is where we'll be by Thursday, not Friday. I'm gonna remain bullish. I do want to lean a little bit bearish, but you just it's not profitable to lean bearish. So I'm gonna take my trades as they come. But all in all, that's my take on the Qs and the SPY. Now, as I put in the bio, right? I am not Nostradamus, and this is for education purposes only. So, hopefully, you don't take anything I say too seriously and make any plays based on anything I say, because I could be wrong. I can be saying something, and then tomorrow when the market opens, I trade accordingly. I trade according to the market. I don't. I try. Let me rephrase. I try not to front run anything. So this is the weekly recap, and that's what I did. So with that said, for you 6 people who are here, and thanks for being here, by the way. If anybody have, I'll take the first 2 stocks, like good old days. If anyone wants to look at 2 stocks. And if no one says anything, then I'm going to look at Apple, because I'm actually very bullish on Apple. So I'll give you guys a couple seconds to put at least one stock up there. If I don't get a stock up there, I'm going to look at Apple. So let me go ahead and give you guys the time. Let's look at Apple. So why am I bullish on Apple? Well, let me tell you why, right? So these lines you see right here are the Fibonacci retracements. Nice. Okay. The Fibonacci retracements, what I did is I used the bottom of the last move, right? The absolute bottom, which was 123.39, up until the absolute top, and that was the 100% move, as you can see here. And then the thing about Fibonacci retracement levels is they are extremely accurate, right? You're either going to get a reversal at the 78.6, the 61.8, or the 50% retracement level, right? As you can see, we've surpassed the 78.6 and are at the 61.8. Now, what's the bad news? Well, they're being sued as a monopoly or whatnot. And in history, as Adam Koo recently said, but shout out to Adam Koo. He's an amazing inventor. He doesn't even know not inventor, technical analyst and investor. Check him out, Adam Koo. He doesn't even know I exist, but I definitely watch all of his stuff. I am getting bullish because we see here that Apple. Let me zone in for you guys. Apple dropped very quickly and then found support at this fib level, right? The 61.8. And we went up and then we dropped again, but then we found support, not resistance. We found support at it. Now, also, what I want you to see is that we are now on the bottom. So you don't want to front run it and get too bullish, right? And the RSI reading is in the lower quadrant. We're above oversold, but it's still not telling me that I should be bullish. So what am I going to do? Well, the premium that I'm going to receive is not going to be like anything to like call home about, but I think it's easy money. What I am going to do is I am going to write bull credit spreads at the 50 retracement, which is 161. I may even go up to 165, above it, right? Because I don't think it's going to I don't think it's going to get all the way down there to 161. So I'm gonna collect premium by writing the 161, 165 bull credit spreads on Apple, because, and this is a little teaser. This is kind of things I teach in my Patreon. I have the account to do it. You may not, but I'm going to write credit spreads. Credit spreads have a max gain and a max loss. They're not unlimited loss, unlimited gain. If I'm wrong about Apple and it goes even lower than 161, making my credit spread lose me money, I'm going to turn them into cash secured puts by selling the leg of the put that I bought, actually making profit off of that, and then rolling the other leg, which is the put that I sold. That's what a credit spread is, down a little bit and out like a year. And now I have turned that loss into an additional a gain of premium, and theoretically we'll be able to own Apple at a better price, because on great companies like Apple, if you know what you're doing and you have the account to do it with, you should not take a loss. And that's why options are so great. All right, I'll do one more. Okay, well, Marco Polo said Baba, so we'll do Baba. Now, I will say this. I refuse to ever invest, trade, not ever, because I have done a short-term trade on Baba before, but I'm not a fan of China, so I don't do it much. But go ahead, let's look up Baba. Okay. All right. Well, Baba doesn't look great. Baba is at the middle of its range for a relative strength, right? Whilst it has dropped a lot, right? If we do the fib retracement, we will see that we'll go ahead and use the absolute bottom. Let's give you the benefit of the doubt. It has retraced. Oh, look at that. It has retraced exactly 78.6%, meaning from here to here is 100%, and then it went down and has closed right at the 23.6 fib level, right? And that can be good if you like Baba. I'm not going to do a fundamental analysis on it, but this level, as you can see, Baba has gone under it a little bit, right? But for the most part, you could see that it is a major support line. It is a major support line. So I will not call you crazy if you start to get bullish on Baba here, although I know that there's a lot of negative things happen in China, so do so at your own peril. I'm not going to play it. But if I had to pick whether I'm going to be bullish or bearish, I would say bullish with an asterisk. I would not buy shares of Baba, but I would go ahead and split the difference and probably sell credit spreads again around $66, $67. Bull put spreads maybe a month out at $66 or $67, and collect that premium. And then if you like Baba, you could always turn that into a cash secured put by rolling, as I explained earlier. But that's Baba. That's how I would play it if I was playing it, but I'm not playing it. So for you 7 people that are here, thanks for coming. This was episode 3. Episode 3s are a little bit longer. I appreciate it. I hope you liked my little spiel there. And remember, I am not Nostradamus. I don't know what the F is going to happen. So don't take anything I say for anything more than just for entertainment purposes and reasons to laugh at me when I'm wrong. Okay? Well, everybody, thank you for coming. Again, for Patreon, we got a call in 30 minutes. You're going to love it. I have a really good education session set up for today. So make sure you are there. All right. This is a great one, I'm telling you. Take care, everybody. Thank you.